Hi, welcome back. Today we are looking at the real cost you can pay for convenience. From buy now, pay later plans to click to buy product tags on Instagram and TikTok, technology makes it super easy for us to shop 24/7. More than a third of us have used buy now, pay later, but 41% of those shoppers reported late payment in the last year alone. And what about the long-term debt you can stack up? Some experts think all this convenience is blinding us to the psychological and financial consequences of click to buy. Today, we're going to talk about that, and we're going to share some steps you can take to protect yourself.
I went through a few years of using it quite often, and I found myself using it quite a lot for silly things, really.
When you use buy now, pay later, you're deferring that payment, so you're just getting the pleasure of spending the money.
You know, I'm an economist, I should know this, right? I know that I will pay 3 times £10, that is £30 in total. Research shows that I just feel that that is actually cheaper.
Alice Tapper is here with me. She's the founder of life and money platform Go Fund Yourself, which is also the title of her book. She's a determined campaigner for stronger regulation in the buy now, pay later industry. To shed light on the psychology of retail and spending, Tim Hogg is back with us. He's a behavioural economist and director at research and ratings agency Fairer Finance. And from PensionBee, head of content marketing, Danny Skerrett. Hello, everyone.
Hello.
Here's the usual disclaimer. Before we start, please do remember anything discussed on the podcast shouldn't be regarded as financial advice or as legal advice. And when investing, your capital is at risk. Now, look, I know you're all financially savvy people, but I'm going to ask you, have you ever used buy now, pay later?
Yeah.
You have?
Yes.
Often?
I went through a few years of using it quite often, and I think I started in a similar way to most people by buying a big high-value item, piece of furniture, and then I found myself using it quite a lot for silly things, really.
And how did that go? Did you manage to make the payments?
Yes, I would say on the late payment thing you mentioned, I think a lot of people fall into that without realising. I think with the app that I was using, when you pay in 3 instalments, it automatically comes out. If you pay in 30 days, it doesn't. You have to physically go on and make the payment.
So you don't necessarily know, do you?
Yeah, exactly.
So that was my recent experience as well. So I use it occasionally, and I was setting up with a new retailer, clicked the buy in 3, went through the whole thing, getting approved, clicking all the forms that, saying I'd read stuff that maybe I probably hadn't read in great detail. Yes, put in my address, it gets delivered. And then I realised I'd never actually set up the repayment plan, and it never told me to do that in that journey. So I had to re-log into the app, which is a bit of a faff, and then find out how to put my direct debit details in and everything like that. So that was a real faff, and I thought, actually, this is why loads of people end up missing their payments. It's not because they can't afford it, it's just because it's a bit more friction to do.
And it's also new. I think so many of us, it is a relatively new credit product, and there are lots of different providers that do things slightly differently. I have used it. I used it when just bought a house. Life was very expensive, and it is incredibly useful for those large purchases that you're going to make one off, and cash flow is a bit tight for a few months, and it is actually a really good way of spreading the cost. I'm sure we'll talk about the pros and cons of it, but I think it can be really useful.
Hi, it's me, Philippa, just interrupting for a moment to say a big thanks to all of you who've subscribed to the Pension Confident podcast. Our mission is to help you feel more financially confident, and we are thrilled with the community we're growing here on YouTube. If you haven't already done it, hit that subscribe button right underneath this video so you never miss an episode. Meantime, enjoy the rest of this month's conversation. Of course, the timing of this episode, it isn't any coincidence. Black Friday sales going on right now. Next month there is Christmas. Then there's the January sales. Should we just get a sense of the impact that seasonal spending can have on us? I mean, Alice, how much more do we tend to spend at this time of the year?
If you look at the average person, we're spending about £700 more in December, which is about 30% for most people. So it is a huge increase in the average spend. I think there's also a huge amount of pressure that lots of us feel to kind of make, particularly with people with kids, to sort of make it this kind of magical time.
And that probably underrates it, doesn't it? Because it's not like we do all our Christmas spending in December.
No, exactly.
I mean, people shop earlier and earlier, don't they? So there's a long lead up to Christmas now, isn't it? When you're probably spending more in the few months in the run-up.
Well, I think
right?
ideally we probably should think about sort of budgeting for Christmas over the year. I think the reality is actually it's quite difficult to do. And the research finds, I think it's around, I think it's 50% of people who, say that they're going to use a, buy now, pay later product are probably going to spend the next 6 months actually paying it off, if not even more than 6 months. So actually, it's July before maybe you've paid off your Christmas debt. So then even thinking about saving up for Christmas, it's sort of caught in this cycle. And I think it can be really, really difficult to kind of manage the pressures of Christmas.
Yeah, and by that time you're managing some holidays and, before you know it, you're looking at the next Christmas, aren't you? But the pressure, you talked about the pressure to make Christmas special. I mean, that's a big deal, isn't it? Particularly for families with kids, but generally the marketing hype around it. I mean, everything urges you to treat yourself, doesn't it?
You're going out to eat more, you're spending more on drinks, you're catching up with friends and family, and you want to let people know during that time of year that they're valued and that you want to spend time with them. That is a pressure too. It's not actually just buying presents.
The other thing about buy now, pay later is that many more people are Googling the buy now, pay later providers at the start of December. So you sort of see it in the data. It's like, as Christmas approaches, we know what's going to happen. We know we're going to spend more money than maybe we do on another month or maybe that we can afford. So we start Googling how we're going to be borrowing the money pretty early on.
Yeah. I think something as well is worth kind of noting, and I've just really noticed this change even in just the last 6 months, that buy now, pay later providers are working kind of hand in hand with retailers to market products. Even I was on the tube on the way here, I see adverts from one buy now, pay later provider basically saying you can buy everything through us. And it's kind of priming us to make all of our shopping, choices through buy now, pay later providers, because they're not, buy now, pay later providers are also just payment platforms. You can also pay immediately and pay up front through them. So it kind of becomes this really neat way to sort of make it seem like it's a, innocent payment choice.
And it's convenience again, isn't it? It's that thing we're talking about. It's just seamless, it's easy, we're busy. Let's do that. Yeah. As you say, particularly if it's like you're confronted with the advertising on your way to work, it kind of feels like a problem solved, doesn't it?
And it's so integrated into the kind of shopping experience in a way that, credit cards aren't necessarily.
Do we know how many of us will get into debt to cover the spending that we choose to make over this season?
So of those who are actually intending to use credit, 40% are going to use buy now, pay later. But I think it's about 50% of us on average that will put some cost of Christmas on a form of credit. So it's just become so incredibly normalised. I mean, I started campaigning for kind of more regulation around buy now, pay later about kind of 5 years ago. And at that point, it was only 1 in 5 of us that would probably be using buy now, pay later to pay for Christmas. So it has become massively normalised just over the last kind of 5 years.
That's interesting, isn't it? Presumably thanks in major part to those marketing campaigns we've just been talking about.
Absolutely. And there's been so much talk about regulation, but at the same time, that hasn't come into place yet, but they have done a fantastic job of kind of capitalising on the moment of kind of relatively limited regulation around marketing and things like that to kind of make us so aware of these providers.
And the zeitgeist, Tim, that whole kind of post-pandemic, I know it's 5 years ago now, but that whole, you kind of deserve it, cost of living crisis, special times need to be special. I mean, these firms have leveraged all that, haven't they? Or it feels that way to me.
Yeah, there's a couple of key behavioural things going on with buy now, pay later. So firstly, it's free, right? And we just know that that's going to be impactful in terms of what we choose to buy and how we choose to buy things, right? So the fact that you don't pay any more if you pay back on time is really important. The other thing is that because it splits up a big cost into smaller costs, like research shows that just psychologically we just feel like it's less expensive. Like it seems really daft, doesn't it? Like I'm looking at a £30 pair of shoes or whatever. If it says first payment £10, even though I know, I'm an economist, I should know this, right? I know that I will pay 3 times £10. That is £30 in total. Research shows that I just feel that is actually cheaper.
Well, it's not now, is it? You're paying 10 now.
I'm paying later, and it's just 10 now. So yeah,
I completely agree with that, because in prep for this podcast, I looked at my buy now, pay later app on the last purchase, and it was a £30 product from Boots, and I paid it over 3 months. why did I do that?
Yeah, why?
It's actually not free. I think we think it's free,
I wanted
but
to
it
ask
isn't.
you that because the idea, it's free.
Yeah.
So it can't be free, surely. How do these
Absolutely
platforms
not.
make money?
No, I kind of two ways that it's essentially, paying for itself. One is that buy now, pay later providers are charging the retailers a percentage on, what you're spending between sort of 2 and 5%, which
But I
is
suppose
quite.
from your point of view, do you care if the retailer's paying?
Well, but
Except
that cost is obviously being passed on to the consumer. And then the other kind of way in which it's paying for itself is that we know that buy now, pay later gets people to spend more money. There's a study from Harvard in 2022 that found that on average it's about $60 more per week, a permanent increase in spending, predominantly on retail for people that are using buy now, pay later. So we know it gets you to spend more money.
That's a
and
lot,
that is
isn't it?
covering the cost of it. Otherwise, retailers wouldn't use it. It's huge. It's a massive, massive increase. And from a behavioural science perspective, I think it's also worth noting that it's effectively kind of decoupling the pain of paying. So when you pay for something with cash, if you hand over a £20 note, it effectively triggers the part of the pain receptors in your brain. It feels painful. When you use buy now, pay later, you're deferring that payment. So you're just getting the pleasure
gratification
of spending the money.
Yeah.
And it's a really, really clever way of kind of manipulating your brain into thinking that this is a kind of totally, cost-free way of having something now.
Which is why some debt advice charities advise people to pay in cash wherever possible. And
Exactly.
that's increasingly becoming less possible. But if you can pay in cash, you feel the pain more and you end up spending less.
We are under this constant temptation to spend. It seems to me in a way that we weren't even like 10 years ago because it is so easy, isn't it? I mean, smartphones, it's smartphones, isn't it? Because I often just walk out of the house with nothing except keys and a smartphone. I pay for pretty well everything on my phone. And I'm guessing most people do.
Yeah, I do. I mean, I never used cash, I have to say. And I think also what has changed is just the retail environment. It's obviously online shopping's, been around for ages now, but it's now not only, going onto a website to spend money, it's within your social media apps, it's on TikTok. Everything is just kind of so integrated and kind of jumbled up into this, online shopping kind of mess. And it's so easy to be able to just kind of click a button and, split a payment. And I think it's kind of no wonder that we're all struggling with this like sense of impulse control in a way to, money.
Even if you're physically shopping in a shop, you're wandering around, you see stuff you buy. If you're just waving your phone at the till, that doesn't feel like spending in the same way, does it? It's a really different, even to handing over a credit card or a debit card, a bit of plastic. Somehow to me, that is it's a different psychological contract.
And there's less friction if you're not having to put in a PIN number as well.
Yeah.
Right? So the whole process has become lower friction. You're not forced to feel the pain, as you were saying, and you're not forced to reflect so much on exactly what you're doing with your cash.
And it's a different shopping experience. When you're on Instagram, they're completely tailored to what you've looked at before, the people you follow, the styles. So if you get like a Marks and Spencer advert, it's a coat that you probably, that is your style, like you've liked a different image before. Whereas when you walk into a shop, it's not tailored to you. You have to search, you have to go and find what you like. I'm
really interested in exactly how we got here, because it does feel to me like this is really ramped up in very recent years. But Alice, give us a bit of history on it, because credit cards, I was interested. 1966 was the first time we had them in the UK, which obviously is a long time ago. We didn't get debit cards until 87.
Yeah, the concept of borrowing has obviously kind of been around for ages. But in terms of if we were looking at frictionless spending and how that's evolved, it really is only in the last kind of sort of 70 years. So as you said, we've had credit cards launched in the UK in 1966, then kind of online shopping and retail and the ability to sort of check out online seamlessly. Well, Shopify in 2006. Apple Pay, which obviously many of us are so familiar with, as you were saying, Philippa, just the ability to just sort of tap and go. Also, what's worth noting is the contactless amounts we've seen kind of massively increase.
Yes.
It's possible to spend kind of thousands now just with kind of a tap. So yeah, Apple Pay came in 2015. Snapchat kind of introduced the ability to make purchases in 2018. Instagram integrated payments in 2019. In the last 5 or 6 years, seen Amazon Live, so live streaming, a bit like TikTok Shop, where people are kind of selling as they are kind of. It kind of reminds me a bit of QVC. It's kind of the new QVC, I guess, on TikTok. But you can pay on your phone while you're watching it, as opposed to having to kind of send a mail order form off. And YouTube shopping more recently, and TikTok shop has kind of exploded, I think, in the last year.
It is rolling at an extraordinary pace, isn't it? And you were talking about Apple Pay. Apple Pay, kind of the start of all this in a way. That's only 10 years ago. So you wonder where it'll go. Talk to me about regulation, because I'm guessing regulation has not caught up.
It's really interesting. The Consumer Credit Act, which kind of forms the foundation of a lot of the way in which credit products are regulated, was kind of put together in the 1970s. And it served us well up until more recently, and up until kind of the existence of buy now, pay later. It's what means, for example, that when you see an advert for a credit card, there's, it tells you what the APR is going to be and things like that. It also means you're protected. So if things go wrong, there's the consumer ombudsman and so forth. With buy now, pay later, there's a sort of sneaky little loophole that means that because it's 0% or free, and because they're relatively short term, it doesn't fall under the regulator's remit. So it is unregulated.
Completely unregulated.
It is if it's 0% and if it is short term, it is unregulated. That is changing. So as of next year in July, that will be kind of regulation day, and buy now, pay later providers will have to, stick to certain rules. I will say I started kind of talking about the regulation of buy now, pay later about 5 years ago, and it was a wild west. It has changed significantly since then. Buy now, pay later providers are acting responsibly on the whole.
So they're self-regulating to a degree.
Absolutely. It has improved.
Presumably because they saw this coming down the road.
Completely, yeah. And there's, I saw kind of anecdotally some horror stories of teenagers, getting debt collection letters 5 years ago. That obviously wouldn't happen now.
Yeah.
But we are seeing, better protection in the form of affordability checks, which is obviously super important. Protection from the consumer ombudsman should come into play in my view, and also reporting to credit reference agencies, because one of the risks of buy now, pay later is that there are so many providers out there. It's very possible to kind of rack up debt across different providers, and there's no kind of communication behind the scenes between different providers to check if you can actually afford it, or maybe you've got £1,000 of Klarna debt, but ClearPay are saying, go for it. So that's the kind of risk, and we want to see regulation that kind of means it's treated like any other credit product. There's affordability checks and so on.
And do we know how much that's happening? I'm guessing there are people who've racked up vast amounts of debt. A lot of people.
I kind of gathered about sort of 200 personal experiences from people who had actually got into, really, really difficult situations. Either, 18-year-olds who had received a debt collection letter for a scrunchie they'd forgot to pay back from, an online retailer, all the way through to people, as you described, who had not really realised that they needed to set up maybe a direct debit or made the payment on time. They then had their mortgage application rejected and things like that. So I think an important point, if I can just add, is that the way that these buy now, pay later products have been packaged doesn't really feel like debt. It doesn't feel like credit. They feel like vehicles to purchase things or payment providers. And I think that makes people feel a little bit more at ease with using them, but maybe actually it's worth being aware that it is a form of credit.
Yeah, Tim, that must be a big part of it.
Yeah, definitely. I mean, even on the details of it as well, there was one survey earlier this year that showed that 1 in 2 people who used buy now, pay later didn't know that there would be late fees if they missed a payment, right? And this is like the key gotcha moment that people have got to watch out for, and maybe half of people aren't aware. So there's a lot in terms of awareness and in terms of providers sending better and better communications to people just before a payment is due. And then if you miss one, immediately telling them, do you want to do something about that pretty quickly so you don't miss another one, and so on. So there's a lot that needs to be done on that.
Because there's so much regulation can do, it seems to me, to kind of separate us from this convenience. But then the technology, it doesn't let you go, does it? Off the back of one of the podcasts we did earlier in the year, we had a fantastic guest who said, look, if you want to rein in your spending, put stuff in the basket, don't buy it. Wait till 24 hours or whatever, and then consider, do you really want this stuff or not? And it is remarkably, effective, I think. So, I was doing that. And then, of course, what you get is you get basket reminders, don't you, in your email? Yeah. Items in your basket. I mean, it's amazing. They hunt you down, don't they?
Yeah, so, I mean, in general, we want to make good decisions easier for ourselves and bad decisions harder, right? And we are probably in a really good place to judge what is going to be a good decision for ourselves if you sort of step back and think about it. And maybe a good decision is spending less on online retail and maybe using less buy now, pay later. So how do we make those decisions to delay easier? And it could be through setting things up on your phone so it's harder to spend money on your phone. And so you have to go back and use a laptop or whatever. That's quite a big friction moment. It could be imposing those delays on yourself, but also just talking to people as well. That kind of mutual accountability can be really important for people.
I was going to say, I think there's quite a lot you can do with settings, aren't there? Which I am all over on everything. The whole kind of like absolutely not to cookies, the whole, making sure that trackers are stripped off all your devices, all those things that make it harder.
Unsubscribing
from
marketing emails.
Don't you get a real
activities?
I get such dopamine hit when I unsubscribe from things, when they rain me with stuff I don't want, and then you unsubscribe and you get this lovely clean inbox without all this stuff.
But it doesn't last long. That's the crazy thing. Is that then you sign up for a 10% off and you're getting more. I think also it's important to note that there are obviously lots of things we can do to kind of help ourselves manage our spending, but we often forget that this isn't just about kind of us versus our impulse control. Behind the scenes, when you're hovering over the pay now button, billions has been invested in trying to get you over the line. And it reminds me of I always think about in Devil Wears Prada she's talking about the cerulean blue lumpy jumper, and she's like, what you don't realise is that this jumper has been chosen for you by this whole invisible machine. And it feels similar to that, where like billions has been spent in, precision engineering and data science and behavioural science to get you to spend money. It's not as simple as just saying, have better impulse control.
All that being said, Buy Now Pay Later does serve a real purpose, and I think it does help a lot of people sort of make those bigger purchases. And also, if your income isn't constant, one of my friends is she's a top lawyer. She's self-employed. She's probably very well paid. Actually, because she's self-employed, her income's very lumpy. She might not get anything one month and an absolute ton the next month. And being able to use things to smooth those purchases is really helpful for her.
That must be true. I'm wondering whether we shouldn't have a little kind of masterclass on how to use it properly then.
I would not use it as a shopping app, because I've noticed on Klarna that it's like Amazon. There's categories, you can shop through it.
Yeah.
So don't use it like that.
Okay.
Delete the app, I would say. It's
not if you have payments on it that you need to repay. But if your balance is
Vitally
clear.
important not to do that. Yeah.
You don't have to be constantly bombarded with notifications. Even just doing it analog and keeping reminders and putting them in your calendar as to when payments are due, I think is kind of essential.
Both of you said that you kind of tripped up over when payments should be made.
It's so easily done.
And you're really savvy people. So, what hope is there for the rest of us?
Also, maybe set yourself a limit. Like, everybody's circumstances are going to be different. But if it's £500, okay, if an item's over £500, then I can spread the payment.
I like two-factor authentication on payments, which is kind of annoying. This way you have to do the two-steps thing and they WhatsApp you or they text you, or you have to use an authenticator on your phone. But it does put that hiccup in, doesn't it, before you just click and go.
Yeah, I do. So I'm sort of most tempted to make irrational purchases of books on Amazon. And so I have two-factor and I stay logged out. And that friction forces me to delay a bit. I mean, I probably do still do the occasional impulse purchase, but it's going to be much less than one-click buy.
One step before putting it in your basket, on most shopping apps, ASOS, Boots, things like that, you can favourite stuff. So maybe that's like a step before putting it in your basket and having a think. Just favourite the item. You'll still get notifications saying, remember you favourited this, or now it's on sale. But maybe that's a nice way of going, okay, here's my shopping list. These are the things I like. A week later, come back and be like, I don't need any of those things, or I just need that one thing.
Oh, I know. And they are so clever with then sending, I even get, I need to turn them off actually. This is a good reminder. In-app notifications just saying, I got one the other day that was like, we really think that you would like a hot tub. I was like, I don't know how big you think my garden is, but and there's so, I mean, maybe that's less effective marketing, but there have been some where it's like, oh, you're absolutely right, I did need that thing, and they're just it's so clever. I think I like to try and bring things back as sort of analog as possible and use like wish lists for keeping track of things I want to spend money on. I think also giving yourself permission to have guilt-free spending. I think things like that can kind of help free you a little bit to splurge when you want to, rather than controlling all of your spending. I think it can be quite helpful.
Keeping a budget is done by a lot of people, and it can be really helpful. It is one of the things that debt advice charities would advise as well. I think it's also worth pointing people to free debt advice as well, because often, through using Buy Now Pay Later or credit cards or whatever else, we can end up in a situation where we are in financial difficulty. And the research shows that when we're in that situation, we feel things like anxiety and depression. We might even feel embarrassed or even worthless, so some really heavy emotions going on. Actually, it's important to realise that actually that's entirely normal in that situation. You're not alone, and that you can go and get free help, which will help you become debt-free and take control of your finances. So there are free charities out there like Step Change, which are really familiar with helping people out of these traps.
Can I just mention something else as well? Because I touched on, being really analog. There are also really positive technologies that can kind of steer your decision making in the right direction. I'm a huge fan of open banking apps, and lots of banking apps themselves now integrate features that, nudge you into kind of automating your savings, for example, or even saying, oh, you spent a little bit more this month, or actually turning on the notification so that when you've made a purchase through Monzo or whatever it is, it actually says you've made the purchase. And it just gets you more familiar with where your money is actually going.
These digital tools are fantastic. I've got a budgeting app, and I got one that didn't allow me to make payments anywhere else. So when I go on it, it just helps me budget. Right, it's not there for me to make payments or to look at things. It's just there to help me understand what I've spent on different things over the course
Which
of
one? That's really
clever.
clever.
So I've got Snoop.
Oh yeah, I love Snoop. It's great. Snoop and Emma are the two I know of.
Others are available.
With like the dopamine hit you get from buying something, you get that from saving. I started a challenge in January on Monzo. Other banks are available. And it was a 1 penny a day savings challenge. Yeah. I'm thrilled when I look at that pot now. So by the end of the year, you're supposed to have, I think, like £648.
Yeah.
So at this point in the year, I've got hundreds of pounds.
So
and it started a penny on January 1st, 2p on January 2nd, and it goes up like that. Okay. So now the daily payments are like £3 something.
But it's
less than a coffee.
It's a coffee, yeah.
It's so clever.
It's completely like changed my mindset in terms of saving up for stuff. Yeah.
There's one with Monzo, for anyone that enjoys kind of the gamification of money. You can use a tool called If This Then That. So, for example, you can set it so that if it's raining outside, you automatically save £10 and things like that, which is just, if you find money managing it quite boring and tedious, I think finding ways to actually make it kind of interesting and fun, why not?
Yeah. But you are right about the kind of dopamine hit of saving, which I know sounds so hilarious because, how can that compare to going out and buying a handbag or something? But actually, it really does. It's so weird. I get this sad little hit every month when I see my pension contribution land in the account.
Yeah.
And it's really fascinating. It's just that, because I'm not one of those people who lives all over my pension balance. I don't live on the app looking to see what it is. I know some people do and find it very rewarding. But that, I do. I get a little warm glow. I think, it's safely gone, and stashed. And as you say, the saving things, when you look at those little automated savings pots, I've got them set up too. Small amounts going in, and it's amazing how they rack up.
Yeah,
and then if you don't look very often, when you do
it's
look,
a nice treat.
It's like a lovely win.
Mm-hmm. Yeah.
It's that consistency. And we say it all the time about pension contributions, but same for saving. Consistency and automation are the two biggest things. And and if you are listening and thinking, I want to start saving or I want to start paying off this debt, if you just start with £10 or whatever it is, a very, very small amount, you won't notice. It will just start rolling. Yeah. So I think the main thing is just start now.
I think also, sorry.
So I was going to say, if you don't see it, you don't miss it, do you?
I think translating, because with Buy Now, Pay Later, it's very obvious what the tangible win of using it is. You're seeing, I'm going to get that new top now. Yeah. I think if you can also translate kind of the opportunity costs. So we've said the average increase in spending for the average person that's using Buy Now, Pay Later, it's $60 extra per week that the research has shown.
I'm still amazed by this.
I know.
It's a lot.
It's a lot of money.
Much.
It's so much money. And that's quick maths, but 3,000-ish a year. So I think translating into the opportunity cost of what that means over the course of a year, maybe even over the course of 10 years, it starts to actually look quite scary, which, not to kind of, you don't want to scare yourself into saving, but I think having a more tangible connection to what you could have otherwise can be really kind of helpful.
What that money could have done for you.
Exactly.
And I'm going to say, and I know we're a pension podcast, I'm going to say, if you'd invested in that way, it would have been sitting there rolling for you.
Yeah.
So there'll be even more of it. I'm just going to wrap this up with best tips for kind of, the tip that you would have for this season right now, reining in your spending.
Mine's maybe a bit basic, but Secret Santa. I think don't feel like you have to buy a gift for everybody, If you have a big family, Secret Santa is fantastic. Absolutely. And if you have a small family, it's even better because you can get a really nice gift.
Yeah.
Yes. Excellent advice.
My mum actually messaged me yesterday, the best message ever, which was, "We're doing Secret Santa this year." I was thrilled. So I think that's a massive one. I think also, sounds really boring, but just planning, actually sitting down and writing a list of, what you've got to spend money on, who you've got to buy a present for, and thinking really carefully about what the budget is, and then going out and making purchases, I think is kind of boring, but really, really important.
Yeah. Go on then, Tim.
Definitely agree with all those. I guess one other thing is, if you think it's going to be really problematic, speak to someone and get help. It's better to do that now before Christmas rather than wait till January.
Yeah, definitely. Thank you all very much indeed. Such a great discussion. I really enjoyed it. I learned loads, as I always seem to do. If you enjoy these podcasts, we would love to hear from you. You can contact us on social media at PensionBee or email us at podcast@pensionbee.com. We would really like to hear your thoughts and questions. And if you're new to the podcast, you can find all the back catalogue episodes on YouTube. They're in the PensionBee app too, or whatever app you prefer. While you're there, you could always leave us a review and a rating. Next week, we'll have a special episode all about what else? The autumn budget. What does the Chancellor have in store for us? In December, we'll be rounding off the year with an episode about micro-retirements, and we'll be looking back at everything we've learned this year with a special bonus episode, keeping your finances and your retirement savings on track. Do not miss those. A final reminder, anything discussed on the podcast shouldn't be regarded as financial advice or as legal advice, and when investing, your capital is at risk. Thanks for being with us. We'll see you next time.